Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark takes a look at gold and precious metal mining stocks. Zeal LLC CEO Adam Hamilton takes a look at the exciting prospects for silver, including its use in solar energy projects. Harold Saunders from Campbell Saunders, bankruptcy trustee, says people running into trouble with their debt should seek help before it becomes a crisis. We'll talk to Ross Clark right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
Our guest is Ross Clark. He's an investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money.
Nice to be with you, Jim.
How did the talk about interest rates last week affect the gold market?
Well, Friday's move as far as the potential for an interest rate hike in the more imminent future rather than out in December clearly had an impact across the board. In particular, U.S. dollar had an exceptionally good move to the upside. Still keeps it within the broad trading range that we've had for the last couple of years and even within that of the last month and a half. But it was enough to take the wind out of the gold market. Gold a week and a half ago had been down around $1,305, $1,310. Bounced back really well in the early part of last week, but ran out of some steam. The resistance that we're looking at up in the 1350, 1360 has clearly put a lid on this market. And the miners, which had the biggest part of the hit during August, they retraced about 60% of that break into the middle of the week. Good area to be looking for resistance as far as we see from a technical perspective. And from the outlook that we've got here, expect us to go back down, retest those lows. The norm would be that we get about a 7-week break off the highs from the August levels.
If the equity markets do go down, mining stocks, will they go up?
Oh, no. Mining stocks will get hit. You might see the precious metals themselves, gold and silver, get some buoyancy with the hit in the equity market. The mining stocks tend to be influenced by as much by the equity market as anything else. So I would thoroughly expect here that the miners will be down 25 to 27% off their highs.
Ross, thanks a lot for chatting with us.
Good to be with you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. Coming up, Adam Hamilton next on This Week in Money.
Always consult your investment professional before making any investment decision.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Adam Hamilton, CEO of ZealLLC.com. He's speaking to us from Colorado. Welcome to This Week in Money, Adam.
Hey, Jim. Good to see you, man.
Silver top $20 an ounce this past week. Is the silver bull back?
Oh, absolutely. I'd frame it a little bit differently. The silver bull never went away. It started back in early 2016, late 2015 technically, right before that, the Fed's first rate hike in 9.5 years. But silver's been in a beautiful uptrend all year, Jim, and we had one correction around 11% in May. And this August correction was just 10%, which is perfectly normal in a bull market. If you look at a trend, a chart, silver just went back down to its support, the lower line of its uptrend channel. And so the bull market never went anywhere. Just a normal correction within a bull market uptrend. Perfectly awesome. Helped rebalance sentiment. keep the silver bull healthy.
Is physical silver becoming tougher to get?
You know, it's a really good question. I usually hear anecdotes about that. We have newsletter subscribers in every state and 50 countries around the world, and people usually write in when stuff like that's going on, and I haven't seen much along those lines this year at all. I follow many other websites as well, and I haven't heard anything from coin dealers, seen many other things on other websites. So my sense is that physical silver is not hard to get right now. There could be isolated shortages of certain coins or certain types of silver in certain markets, but I haven't seen any news of that even. Now, there have been episodes of this in the past and in recent years where silver demand has shot up and silver supply in the form of coins people want hasn't been able to keep pace. But so far this year, I haven't come across any reports of that, Jim. So in my opinion, no.
What's happening in the paper silver market?
The paper silver market is pretty crazy. That's actually a big concern for me. Silver futures often drive the physical silver price. The academics say that's not possible, that futures can't drive physical prices, but traders know it's absolutely possible. In the U.S. and really the world, the benchmark silver price is the U.S. COMEX silver futures. And the speculators are heavily long these silver futures, 5,000-ounce contracts. They can use extreme leverage to trade them on the order of 15 or 20 times leverage compared to the legal limit in the stock markets at 2 times since the mid-1970s. And with such extreme leverage, these guys who are long silver futures, even a relatively minor sell-off, like in the order of 5%, has a chance to get them to sell en masse. And so there's a risk of a cascading silver futures sell-off at some point. These guys have had their silver futures longs to the highest levels in record since at least 1999 and probably ever. And those have moderated a bit since early July, but they're still up around the 8th or 9th highest out of the 920 or so weeks since early 1999. The Commitments to Traders report from the U.S. Commodities Futures Trading Commission is published once a week, and that's a definitive read on what futures speculators are doing. And future speculators are heavily long silver right now, nearly the highest level on record, and that's a big future silver overhang, big futures selling overhang that could hit silver if anything spooks these guys into selling of the herd.
How big is the silver market compared to the gold market, and is it manipulated?
Well, on the size, if you look at the definitive numbers for supply and demand for gold and silver in recent years, the World Gold Council publishes a definitive gold read, and the Silver Institute publishes a definitive fundamental read in silver. If you multiply the average silver price in last year and the average gold price last year by their demand over the year, according to these organizations that track this stuff, silver is about 1/8 the size of gold. And that's what makes silver such a highly leveraged investment. Is it's such a small market that if capital flows into it, every dollar that's spent in silver has up to 8 times the potential impact that dollar would have on gold just by virtue of its small size. On the manipulation front, Jim, that's a really interesting question. I'm not a conspiracy theorist. I've studied these theories in depth, and there's some truth to some of them, not a lot of truth to a lot of other ones. If I was a market manipulator, I'd concentrate in gold personally. The gold price is what's watched by the financial media and mainstream investors. The gold price is the warning sign for inflation, for all kinds of problems in the monetary system. Silver kind of just amplifies and rides along on gold's coattails. So silver is of secondary importance. I don't think there's much bang for your buck manipulating silver if you're trying to kind of destroy monetary signals, because everybody watches gold and the mainstream just doesn't even care about silver unless silver's running and people are excited about it, but that doesn't happen very often. And so I think the case for silver manipulation is harder to make than the case for gold manipulation. But I realize there's a lot of silver enthusiasts out there who would vehemently disagree with me. That's just what I've observed.
The silver miners at this point, are you more bullish on the majors, mid-tiers, or the juniors?
My favorite miners are generally the smaller miners. I like the majors. They're strong companies, obviously, or they would never got to major status. But they have relatively large market capitalizations, and the bigger the market capitalization of a stock, the more capital it needs to come in, the more new investors buying to drive that stock higher. So I generally prefer smaller miners. I like the miners as juniors because I prefer companies with actual cash flows. The explorers are pretty risky. Some companies have been explorers for a decade plus, and it takes a decade plus to bring a new mine online, and I don't like that risk for most of my portfolio. But the smaller silver miners are already cash flowing. They have relatively small market caps, so not much capital needs to come into them to drive them sharply higher. So in any bull market up, like the smaller miners will have the best gains. The ones with the most superior fundamentals, their gains will trounce that of the major silver miners. So I like the smaller silver miners. Call them juniors if you want, depending on their production, or mid-tier, but I definitely prefer the smaller ones to the major ones.
Are they easier to research?
Yeah, they are, because the smaller silver miners often have one or a few mines, and so you can get a grasp of them pretty quickly. Well, the major miners might have, 5, 6, 10, or multiple mines or silver streams, which is when they buy silver production from miners that use silver as a byproduct, like base metals miners. And so the fewer mines a company has, generally the easier it is to analyze, because you don't have to think about the interaction between the different mines, the different cash flows, the different operations. You just have to look at a few of them. And so it's easier to kind of assimilate in your head when there's fewer mining operations to look at than many.
We've heard prediction of silver hitting anywhere from $100 to $1,000 an ounce. Do you have a price target and a time frame for the silver high?
Well, secular bull markets in the precious metals generally run a decade or more. The 1970s was a decade, the 2000s were a decade. And so I think that if we're in a new secular gold and silver bull, which I'm growing increasingly confident we are in, since there was a multi-year bear market between the end of the last secular bull in 2011 and the current one starting in late 2015, it could run about 10 years, Jim. As far as a target, it's hard to tell. Everybody likes that January 1980 silver price. It was like $48 in nominal terms. That's equivalent to about $150 if you just adjust for U.S. CPI inflation today. But the problem with that is it was a parabola. It was a popular speculative mania. I mean, those prices lasted for a day, and they collapsed almost as quickly as they rose. Like, if you look at a chart, it's just like this huge spike upwards followed by this instant collapse. So silver could definitely get above $150 an ounce again, maybe even higher than that if there's a popular speculative mania. But the trick is that will mark the end of this current bull market, whether it's 5 years from now or 10 years from now or whatever. And there won't be much time to sell. Selling popular manias are probably the hardest thing to sell into, because people are so excited about the asset at that point. That's when you're hearing the tips from the taxi drivers, when everybody's talking to you about these things who's never invested in them before. And so I'm not a big fan of speculative manias, but I could easily see silver going back over 150, which is over its 1980 high in today's dollars.
When silver does hit its high, what range should the gold-silver ratio be in?
That's a really good question. During the stock panic in late 2008 and also again in early 2016, the silver-gold ratio collapsed to about, say, the low 80s, 82, 83. The normal range in recent years has been about 55. That was true before the stock panic in the years leading up to 2008, and also mostly true in the years after the panic. It was about 57 between 2009 and 2012. But when you get a silver speculative mania, when people get really excited about silver, they can drive this ratio way, way higher. In other words, silver rises way faster than gold does on a relative basis. If memory serves, back in early 2011, when silver got really exciting and shot up near, near $50 an ounce, $45 an ounce, I think that silver-gold ratio was in the low 30s. So we could easily see low 30s towards the end of this next silver bull, and maybe even higher, maybe even a foray into the 20s or so if there's a popular speculative mania. But it's going to be the ratio is going to be a lot lower in silver-gold terms. Silver's going to be worth a lot more relative to gold as silver shoots up faster than gold, and when we get towards the end of this next silver bull.
Are geopolitics a threat to silver miners?
I don't think so, Jim. The Silver Institute I mentioned earlier, they're the guys who do all the research on silver supply and demand fundamentals. In their latest report for 2015, released back in May, they said that 70% of the world's silver supply in 2015 was a byproduct. Only 30% came from primary silver mines. And so most of the silver is not coming from silver miners in the first place. And the big base metals mines are generally pretty tight with the countries that they do business in, because they're just a huge source of revenue for those local governments. They pay big royalties on their copper, zinc, whatever production, lead production. And I don't think the countries would want to shut them down. And also the silver miners, both in byproduct terms and primary metal terms, are well diversified around the world. So if you have one country get a little uppity and get a little crazy on the geopolitical front, it's usually just a tiny percentage of silver that's coming from that country. There's a few exceptions. If we had problems in Mexico or Peru, silver might have some supply issues, but those countries have been really geopolitically friendly for miners, to miners, for a long time. I don't see any problems arising there. So no, I don't think geopolitics are a threat to silver production globally.
Does the U.S. dollar need to decline for silver to move significantly higher?
Not necessarily. It would certainly help. If the dollar falls, gold will generally get a bid. The futures traders love to bid gold higher when the dollar is lower. And if gold goes higher, that's what motivates speculators and investors to come into silver. Silver's always followed gold technically. Gold has to rally first and decisively enough for people to believe that rally is sustainable. And that's the point when they flood into silver. And since the silver market is 1/8 the size of gold, silver goes up faster than gold, leveraging gold's gains 2 times to 3 times. So in the sense that a weaker dollar will boost gold, that's good for silver. But on the other hand, you can have silver grow more popular with investors without a dollar falling. The gold can just rally on its own merits. Say if the U.S. stock markets, when the U.S. stock markets roll over from these unnatural Fed-goosed artificial levels they've been at for this summer, people are going to flock to gold. Gold is the only major asset class that moves counter to stock markets. It's the ultimate portfolio diversifier. And if gold rallies consistently for any reason, including investment demand rising, silver is going to rally right along with it and leverage its gains. So a weaker dollar would help silver, but it's absolutely not necessary for silver to rally. But a higher gold price is pretty much necessary. It's rare in history, almost non-existent, to find a major silver rally where gold didn't accompany it. So gold has to get investors excited about silver before they'll start flooding in a major way.
Does quantitative easing affect the silver market?
Oh, absolutely, absolutely. Quantitative easing is the fancy term for printing money. Central banks conjure new money out of thin air, and they use it to buy assets, mostly bonds. In the case of the Bank of Japan, also some stock ETFs, which is pretty crazy. So quantitative easing is pure inflation, just printing new money, creating new money. And the larger the supply of money in the world, fiat dollars, fiat euros, fiat yen, fiat whatever, there's more of it relative to the supply of silver. Silver mine supply can't increase very fast, maybe 1% or 2% a year on average. But the fiat money supplies can grow 7, 8, 10% a year annually. So relatively more money is chasing relatively less silver. So the more money the central banks inject into the system through QE money printing, the more money there is to chase silver in this new bull market. And so, yeah, silver can go a lot higher the crazier the central banks get, without any doubt.
Should a person hold actual physical silver, or is a silver certificate good enough?
I think the foundation of every portfolio should be physical gold or silver in your own immediate possession, Jim. I've advocated that forever, for decades. Every investor should have 5% to 20% of their investable assets in physical gold or silver that they hold, hidden in their house, in their safes, not stored in a bank deposit box. Once you have that physical foundation of gold and silver in place, it's fine to buy, mining stocks, silver ETFs, whatever you want to buy, but that core position in physical is really important, because you never know when stock markets are going to shut down, governments are going to fail, there's going to be some draconian new law, governments are kind of going to try to crack down on ownership of these metals because they're kind of outside the normal monetary system. So, yeah, I've always advocated a core foundation of physical gold and silver before any paper investments. There's
always been the argument, bullion or coins. Which side of the coin do you fall on?
I'm a bullion guy. I like the most bang for my buck. I want to get the most silver possible for the amount of dollars I can throw at it. And so I always look for the cheapest possible physical silver when I'm buying. And I recommend that to my subscribers as well. Sometimes that's junk silver coins, although that market's got a premium. But you want to look for the cheapest silver you can get, the lowest price per ounce. Sometimes the numismatic, the collectible market, has big gains when silver grows more popular, but I just really have more silver rather than less silver. So I go for bullion over collectible coins any day of the week.
We'll have more with Adam Hamilton next on This Week in Money.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Adam Hamilton, CEO of ZealLLC.com. Is the growing solar market going to create a bigger demand for silver just because it's so good as a reflective material?
Absolutely. That's a great point, Jim. The Silver Institute, in their 2015 report on global solar fundamentals, broke out solar. I don't have that report in front of me. I can't remember the exact number, but say in the order of 7% of the global silver demand last year, and I think that's only going to grow. There's a lot of pressure around the world for clean energy, rightly or wrongly, and solar is really neat for a lot of uses, and it's really efficient. It's kind of like a free way to make electricity once you have the capital investments out of the way, and it's so popular, so fashionable. And so I only see silver demand growing in the coming years as conventional energy gets more expensive due to government policies. And so silver demand solar demand for silver should only grow in the future years, I think.
Is that going to push the price up regardless of whether people look at it as a precious metal or not?
Yeah, any demand. It doesn't matter why you buy silver. If you buy silver, silver's going to go higher. No matter what the reason is, the motivations are irrelevant, the usage of the metal is irrelevant. And in some ways, solar or industrial usage is better because the silver is effectively destroyed. When silver panels get old, I imagine most of them are not recycled. I know that hasn't really happened yet because it's a new industry, but it will. But that silver will just kind of be taken out of circulation, just like silver in iPhones for the most part, any electronic device. And so, yeah, any silver demand will help push up silver price regardless of where it comes from, what silver's used for.
I know that people love silver-related jewelry. Is that much of a factor in the business?
Jewelry is a big component of demand. I don't recall what that Silver Institute report said about it last year, but it was material. It wasn't as big as gold, where jewelry is usually over half the demand, but it was still fairly large. And so silver jewelry is definitely a factor. The big jewelry consumers in the world are the Asians, the Indian, the Chinese, and they do a lot of their gold investment in the form of jewelry. They buy beautiful gold jewelry, and they consider it as an investment, not just adornment. And you don't hear as many stories out of India or China about people buying silver as an investment. Silver jewelry is a form of investment. So I don't think the silver investment market through jewelry is as developed as the gold investment market through jewelry, but it's something I'd like to look into. It's a really interesting idea.
Do you have to worry about fake or counterfeit silver coins? I know recently some tungsten slugs were gold-plated coming out of China, and investors were warned about that. Any problems with silver?
That's really interesting. I've always recommended buying gold and silver coins through reputable coin dealers, and those guys all test this stuff. They have devices that look at the exact size, the exact weight, the specific gravity, the density of the coins they sell to you, and they can test them to see if they're actually the metals that they purport to be. And so if you're buying silver on eBay or something, I'd worry about it, but if you're buying silver from a decades-old reputable coin dealer, it's probably not a problem at all. But it's definitely something to consider if you're buying through non-conventional channels, although I don't know how you would check that through a non-conventional channel.
Are so-called silver bugs happy to see the current market?
Yeah, definitely. It's been a long, kind of dark sojourn through just a sentiment wasteland in recent years since silver's last bull market ended. So they've been really excited. Silver is a slow burner. It takes a while to get started. Gold has to rally for a while. Earlier this year, when gold's new bull started, silver lagged quite a bit, like in January and in February and even March. But finally in April, once investors realized that gold's new bull was real and sustainable, silver just surged. And so I think silver investors are getting happier. There's not that enthusiasm or fervor that's there later in the silver bull yet, but it'll come. But yeah, the people who like silver are really excited to see it in the new bull market and rising nicely again, without a doubt.
When addressing your portfolio, should you look at silver and gold investments on a monthly basis rather than making one purchase or one big purchase at once? Averaging.
Yeah, definitely. It depends on what the situation is when you're buying. For instance, back in mid-December, right around that Fed rate hike, the first one in a decade or so, silver and gold hit roughly 6-year secular lows. And those are major lows. If you see something at a 6+ year low, it's a great time to buy. And sometime like that, it's a great time just to back up the truck and dump everything you can into it. And but if you're in a normal situation like a bull market, it's good to average in. It's hard to game uplegs and corrections exactly. You can have an idea when silver's getting a little bit frothy, when upleg's likely to peak. You probably don't want to buy then if it's been really strong that month. And you can have an idea when corrections are likely to trough, but no one knows the exact bottoms or tops. But yeah, it's a good idea to average in, to buy slowly over time, and that way you're not going to hit the exact tops, you're not going to miss the exact bottoms, but you'll have a good price over time as long as silver's in a bull market, which it should be for the coming years.
Is one of the big mistakes people make trying to time that precise moment when you bought it at the lowest possible price and then sell at the highest price?
Yeah, it's impossible. Market timing is my game. I've been doing it for decades, and it's so hard. The thing is a probability. There's always a spectrum. There's no matter what the odds are that a top is in or a bottom is in, there's always a chance, from small to larger that's not really the top, not really the bottom. And it depends on so many factors that it's just impossible to predict. And you can have news that arises at a certain time that can exacerbate a topping or bottoming, drive prices higher in a topping or lower in a bottoming. And so it's impossible to game exact tops and bottoms. You can have a pretty good idea of when the odds favor a topping or bottom, but you can never know exactly. So, yeah, you don't want to get too aggressive or cute in trying to time the markets, especially if you're a long-term investor intending to hold for years or more. Then you can just buy in gradually, preferably after minor sell-offs, pullbacks, or corrections, and just build your silver hoard that way.
One investor suggested that perhaps for younger people especially, buying an ounce of silver every month will never be regretted.
That's a great idea. Silver is really affordable, and I think that's really the allure for a lot of people. You can buy a silver coin for $20 or so, and that's within the range of almost everybody, compared to $13.50-ish for gold, which is out of the range of many, if not most people. And I think kids would be really well served by putting some of their savings into silver. It's a great investment. It's going to be valuable forever. It's going to be valuable all around the world. It's a great monetary asset like gold that's going to work for a long time, if not forever. And I also think silver is a great thing to get people interested in the precious metals and hard money. People, especially today, have grown up in a world where it's all virtual. They use credit cards to buy things. They don't even use cash anymore. Some businesses, as you know, Jim, don't even accept cash anymore, which is crazy for us older folks. And the silver, when you can get physical coins into someone's hands, silver, gold, whatever, it really helps them understand that investment more, get more interested in it. I like to dump a bunch of gold coins into people's hands. I'm telling when I want to talk to them about gold investing, like friends, and it's amazing how they open it up once they actually can feel the physicality of it, can feel the cold metal in their hands. And silver does the same thing. It's really great to get people interested in diversifying their investments through precious metals.
Well, a lot of people don't know how valuable silver is. I saw a video clip recently where people were offered a large chocolate bar or a bar of silver the same size, and most of the people took the chocolate bar.
Oh my gosh, the media dumbing down of our populace is complete. That's horrendous. It is sad. Wall Street's always been opposed to gold and silver. They're alternative assets in every sense of the word. When people buy gold or silver, they're not putting money in stocks, and Wall Street gets no commission. And usually gold and silver are rising when stock markets are drifting lower or falling. They're assets that perform the best in bear markets in general stocks. And so the media, the financial media, has always been opposed to gold and silver. They always ridicule it whatever chance they can get. And I think that sinks in, unless people take it upon themselves to research this stuff, to read up on the internet, to look into the history of gold and silver and what they've done for investments, they don't really have any idea. And so I can see people, if they haven't taken that time, of just not understanding the value in the precious metals. It's really sad, though, really unfortunate for our societies.
Is it a fact that because brokers don't get any commission on gold and silver sales, they really discourage it?
Yeah, absolutely. That, plus they don't understand it. They're raised in the Wall Street world. They're bread and butters from the Wall Street world, so they just take on that view as well. I know high-end financial planners who consult with high net worth individuals, and they hate gold and silver just because they don't understand it well enough, and I know hedge fund managers personally that feel the same way. Yet the more I talk to these people, these personal friends, the more they get interested in it. Unless people have had the opportunity to look at gold and silver independently, to not be just fed the Wall Street thing that these are anachronistic relics that are useless in the modern world, that are obsolete, it's hard to overcome that. But once people can start to understand for themselves the merits of gold and silver, of moving counter to a stock portfolio, of being a physical asset that governments can't take away from you, that can't be closed on a bank holiday, can't be, I don't know what the word is, just they're more stable, more secure. People take that to heart and they start looking into it. So it just takes some time, some education. If people have no background in this stuff, it's hard to understand what the value is. But once they see that, it starts to dawn on them why gold and silver are useful in portfolios.
Adam, could you give us a bit of a background on Zeal LLC?
Yeah, Zeal LLC is a little stock trading company I founded about 17 years ago. We publish a couple newsletters, a monthly and weekly, to help investors and speculators around the world better understand the markets and make better trades. We've done about 850 trades since 2001, average annualized realized gain over 23%. We'd love to have anybody if they're interested in the markets. Our newsletters are priced pretty low, about $10 an issue, and we just want to help investors thrive with our research.
Adam, thanks a lot for being on This Week in Money.
Thanks so much for having me, Jim. Great to see you.
My guest has been Adam Hamilton, CEO of ZealLLC.com. He was speaking to us from Colorado. Coming up, Harold Saunders from Campbell Saunders Bankruptcy Trustee, next on This Week in Money.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Harold Saunders. He's a trustee in bankruptcy with Campbell Saunders in Vancouver. You can find them online at csvan.com. Harold, welcome back to This Week in Money.
Thank you so much for having me on.
It looks like we have a debt bubble, not just in Canada, but worldwide. First, how and when is a trustee in bankruptcy able to help people with financial problems?
Well, we can help them if they're at a point of that they just can't solve it anymore, or we can see them when they begin to see troubles happening. And sometimes if they get to us sooner rather than later, there may be an opportunity to save a business if it's a business situation. They have options, or even as an individual. There's many options. Bankruptcy is the last resort, obviously, but there's other options. Among them are proposals, private settlements, getting legal advice to restructure legally the affairs of their businesses, whatever. But we are able to get involved, depending on any stage actually, and depending what the circumstances are, to see what we can do at times to save the business, or maybe not. If we can't, then we can let it go die or whatever, or maybe a proposal or bankruptcy, or as individuals, there's options. I mean, they can if they can pay their debts in full over a period of time. There's credit counseling society that does that. We do consumer proposals or bigger proposals depending on the extent of the debt. If that's over $250,000, not including a house mortgage, we can do that. And obviously the last resort is a bankruptcy. We try to avoid it if we can. The main thing is going over the options, learning what the current situation is, and then guiding or advising the debtors to what their options are.
Let's look at mortgage debt. Ross Kay from the wealthyhomeowner.ca was on This Week in Money recently and told us the Vancouver real estate market topped back in February. Now the average house price in Vancouver is down just about 27% and sales have dried up. So let's look at the scenario of a collapsing real estate market and the associated job loss. Who's at the biggest risk?
Here's a problem that I see looking into it. Obviously, if someone loses their job or can't afford to pay the mortgage payments, and eventually, I don't know when, interest rates may go up or whatever, they could have some difficulties, or even if they've lost their job or whatever. In business situations, you have many businesses are getting involved in various stages of development. They are the big developers who have properties or units that they might have pre-sold and may not close, and there may be issues dealing with that. You have the smaller corporations or whatever who will buy real estate and get it rezoned, and they might have paid at the market price at the time, but now with the current market situation, they may not be able to develop it, or they may be in the stage of development that they may not be able to recover their costs, and that could present some problems. So I see potential problems developing as we go forward on this. The market today, from what I'm hearing, is still, yes, it's going down, but depending on the area, different areas of the Lower Mainland have been affected differently, and that can create some problems, especially as an individual may have bought prior to selling their own home, and they're without any conditions, and that can create problems also. So there's a myriad of issues that we have to look at that I see coming to the fore sooner rather than later.
Are banks making loans and mortgages tougher to get?
Mortgages are covered in the sense if they're secured on the property, obviously. Depending if there's equity or not equity, then mortgage companies or banks may get nervous on that, especially if there's any default on payments. And I have no idea where they're going to go on that, but they're becoming much more conservative in valuing their portfolio and even lending money right now, or giving additional loans and so forth. I think that CMHC has warned the banks and the government saying, hey, you better be careful on what you're doing.
CMHC, of course, has mortgage insurance. If somebody defaults on a CMHC mortgage, what happens?
Well, if there's a default, then if they have whatever, depending on the terms of their arrangement with the bank, the CMHC will reimburse the bank for all or some of their losses. That's why they get the insurance. Now CMHC, I think, recently increased say if your houses are over a certain amount, we're not going to cover you or something like that, so be very careful. So if the banks are going to get covered, generally they are covered. They could become more risk averse and they may not be prepared to lend. You always have asset-based lenders who may lend, but their rates are much higher than standard mortgage rates.
Canada has recourse mortgages except for Alberta, which has non-recourse mortgages. What's the difference between those types of mortgages?
Well, if a bank forecloses and takes title to the property, I'm talking British Columbia, then it'll wipe out the debt. I mean, they've taken title, order absolute. If they foreclose and the property is sold at a loss, then they or their insurers, whoever they are, let's say CMHC, can go after the individuals for the shortfall.
Does it make a difference for a trustee in bankruptcy when you deal with those kind of mortgages?
No, it doesn't, because basically they are a creditor in the estate, and they will file their claim. Usually, we get a pretty good idea. We try to get a comparative margin analysis, basically to determine what the value is when people will do an insolvency filing, and then determine the extent of the secured debt outstanding. And that'll show up if there's a potential shortfall or not. And that can change, because as of the date, the properties may go down in value. There's risk also because if someone will continue to make the mortgage payments, there is case law, my understanding is that if they continue making those payments after they do an insolvency filing, such as a proposal or a bankruptcy, they're basically deemed to be entering into a new contract with the mortgage companies or the banks, which means that if there's a foreclosure after that, then their insolvency proceedings will not help them. It's quite interesting and complicated. We always warn people, be very careful. If you continue to make your payments, there's problems down the road, then there may be some issues there. We do our best in doing an assessment to cover all bases, so people know what they're doing.
Are auto loans, consumer debt, and credit card debt an accident waiting to happen? And are there options for people with those financial difficulties?
Well, if someone, let's say a financial institution, has a lien on a vehicle, such as a conditional sales contract, and there's default on it, and they see in British Columbia, there's a Personal Property Security Act which says seize or sue. So if they seize it, have a bailiff pick it up, or it's voluntary return and acknowledge that they're accepting it, that'll wipe out the debt. On a consumer loan, on a business loan, someone who's got a trucking business or something, that may not be covered. That's not going to be covered. But it's a consumer loan, then it will be. However, leases, leases will, if there's a shortfall, that could survive. But if they sue rather than seize, let's say they consider the value not to be much and they sue, then there's then they have a claim against the estate, or later on if the people continue making the payments. That's what we warn people. Be very careful.
Really? So you think you're doing the right thing by making payments, but that could actually be held against you?
It could, but some people need the car for whatever reasons, to get to work, to a vehicle, to do, if they're self-employed, whatever it is, and they know that we do our best to explain the potential risks that could be there.
You're listening to This Week in Money. I'm Jim Goddard. We're chatting with Harold Saunders. He's a trustee in bankruptcy with Campbell Saunders in Vancouver. Now, we've heard in surveys that half of the Canadian working population would be in great difficulty if they lost their job immediately or if they needed $2,000, and the same amount of people say they would have a hard time just saving 5% of their income. Is this a relatively new phenomena?
Well, people who are overextended in debt have, as they say, especially mortgages because they were paying high prices. If things change and there's an adjustment on income or whatever, or their spouse, partner gets a reduction in hours or they get a reduction in hours, they can create a lot of problems. Because there is a major change happening. So that's the way you have to look at it. And sometimes when people come to see us and they just can't handle the full debt load, but if they can do a proposal or ultimately a bankruptcy, which we try to avoid if we can, and they do a proposal, then they may be able to have that additional cash flow. They're compromising their debt, so they're not paying the extreme maximum minimal payments or combined payments. If it's accepted by the creditors, then they may have additional cash flow to maintain their mortgages or their other secured debt.
Now, banks have provided easy credit for a number of years, but as the market cycles, some of that debt becomes unpayable. Do banks just write it off, or do they do their very best to chase everybody down for payment?
They do. It depending. I mean, if they see this hope, they can go to court and get a judgment. And they can then begin garnishing wages, or they can garnish bank accounts. If there's money, if they're dealing with a bank that has a secured loan, but they have money in their bank account, the bank can offset. If they see a problem, they can take the money out. The bank can go to court and get a judgment and then garnish wages. Banks can get a judgment and register their own property, if they so desire. So they look at all the situation, people's line of credits and large credit card balances and large credit card debt. They can be proactive on that.
Should people focus on paying down debt instead of taking on new debt?
We try to advise people to live within their means if they can. If they're going to take additional debt they can't handle it, it's the inevitable what happen. They'll be born from Peter to pay Paul. So, if they're having difficulties and they can't manage their affairs now, they should see an insolvency professional who can give them advice to go forward in any way, try their best to do it. We can't strategize. We're not allowed to. We're not lawyers. We don't have privilege, but we can at least show them the consequences of what they're doing.
Are people embarrassed to ask for help from people like you?
They are initially, but we do our best. They come in, and then we calm them down, and we show them that we care, we're professional, and we're there to see what we can do to assist them.
Are the banks reasonable when it comes to letting people perhaps restructure their payments?
They usually request their payments to be increased for them to approve the proposal. And we go back and deal with the debtors and see if they can do it or meet them halfway or whatever. Certain financial institutions are more aggressive than others. The big issue if you have CRA debt, if you owe a lot of income taxes. They're pretty astute, and they look at a history of compliance and so forth, and we deal with a lot of that, situations where people, for whatever reason, have not owe quite a bit of money to CRA, and we know basically what they're expecting to see in a proposal and so forth.
Are taxes something that people don't factor into their expenses?
Many times they don't, especially if they're self-employed. Many of them either live on the gross amount or they're re-injecting the amount they should be sending in for taxes into their business. We have cases of people who are in business, or I'm talking of proprietors or even corporations who don't remit, I should say, source deductions that they withhold from their employees, or they don't send in GST. And there is director's liability for the corporation for non-remittance, even though the corporation may go bankrupt or whatever. There's still director's liability. And so there's a lot of issues there that we look into when we see situations like that to see the best way to go about it. We always look at it. All depends on the extent and what can be done.
Is there any charge if somebody comes in to see a trustee in bankruptcy?
We don't charge anyone when they come in to see us. The initial meetings are basically we don't charge, and we're there to see. It may not be an insolvency file for us. We guide them where they should go. Our duty is to look out for the best interests when they come in, and do an assessment and see what is at. We're required to do that.
Is it better for people to seek out a trustee in bankruptcy as soon as they can, as soon as they realize they're in trouble?
I think if they see there's problems, it doesn't hurt to call to come in for a meeting. Many times there may be nothing we can do. It's too early, but we can at least see it and we can talk to them. And I think that's very, very important. Because if they come in sooner rather than later, their options may be, they may have more options. If it's a business that's encountering some difficulties and comes in, we can see, well, maybe there's some options we can do now, but it's going to wait a year or more later when everything blows up on them. The options are limited. Especially banks have their rights to realize on their securities on businesses and so forth.
In some cases, is it better to go bankrupt and start with a clean slate?
In some cases, yes. If there's no alternative, absolutely, and we see a lot of that. Sometimes many people will say, well, you know what? We want to pay something. They may be in a type of profession that they can't practice if they go bankrupt, or they may lose their job. But we'll look at all those options. And then most people, I think, want to pay their debt. But if they can't, then obviously the ultimate is the bankruptcy. But if they can pay a portion of it, then we look at a possible proposal.
Some people feel that they're absolute failures if they have to declare bankruptcy.
I know they do. It's very emotional. Very, very emotional. I see a lot of people. We have a box of Kleenex in the office here in case they have some, and that's normal. People are people. And we try to calm them down. We try to talk to them and say, look, it's your choice. We don't make the decision for you, but here are some options for you. And sometimes people come to us and they say, well, we see, wait a minute, if interest rates are eliminated, you may be able to go through a program such as Credit Counseling Society where you pay 100 cents on a dollar for the most part over time with maybe a nominal interest. And we do that. But we look at all the options. That's our job. If I think a lawyer can resolve it with private negotiations, I recommend that to the debtor who's coming to see me.
Do you see that happen more often now?
With solving it outside of a process?
Yes.
It's continuing. It all depends on circumstances. Sometimes it's just not possible. But many times, if there's especially one creditor who's owed a lot of money and maybe there's a private settlement that can be negotiated or things like that, or if it's a standstill agreement, there's many ways. You have to look at the situation. As I said, it's a process of elimination, and there's so many options. But the main thing is sitting the people down and having them come in, provide us. Many times people don't have all the information, so we can't really give them good direction. But if we get the information, we can look at the options and we say, okay, here's what the issues are. I think for the most part, they're happy when they leave. They say, you know what, I feel better now. Now I know what I can do or not do.
How can people get in touch with you?
Well, we have my personal number is We have two numbers, 604-821-9882, or 604, we have two offices, Vancouver and Richland, 604-915-5550. We have people coming to us from all over the Lower Mainland. A lot of people know us, they send people to us because of our reputation. And, you know, our email is csvan.com. My email is hsaunders@csvan.com. I think it's important that they come and they talk, we see the situation. Because, you know, I always believe prevention is better than cure. And if possible, we look at that way.
Harold, thank you so much for being on This Week in Money.
Thank you so much for having me on.
My guest has been Harold Saunders, trustee in bankruptcy with Campbell Saunders in Vancouver. You can find them online at csvan.com. That wraps up our show for this week. We'd like to thank our guests, Ross Clark, Adam Hamilton, and Harold Saunders. And thank you for listening. Questions for the show can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.